Real estate market is booming right now, but is it a better investment than individual stocks, mutual funds, etc.? Who knows, but how are we going to get that answer? We're going to bring in a real estate professional. We're going to go after it. Let's see who wins. Let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I'm a practicing financial advisor. We do regular videos on market updates, straight talk, and educational videos like you're going to see today. So, if you like this, if you find value, please do consider subscribing, hitting the like button and all of that. So, real estate market is booming, especially down here in what's called a beach community. I think it's getting a little out of control. We'll talk about that in another video. Haven't recorded it yet, but it will be up here about is the real estate market overvalued. So I thought it'd be great to talk about real estate and stocks and what is a better investment as far as certain individual points. So with me today, I've got Dan Tagliente. Dan, introduce yourself, your firm, and your area you cover.
Dan Tagliente, I'm with Keller Williams Realty. I'm out of Selbyville, Delaware. I'm licensed in Maryland and Delaware. Sell the beaches from Ocean City all the way up through Lewis, Rehoboth, and inland. And I have a keen eye for the market as I've owned property here, invested property, built property in the last 30 years.
So he's a big real estate guy. I, on the other hand, I've been in the investment business for 20 years, so this should be good. Are you ready?
I am ready.
All right, so first up, tax benefits of real estate. Go.
Tax benefits of real estate, obviously over the term of your loan, you're going to get the spread. Market's going to go up, your house is going to go down as far as paying off the mortgage, and you're going to make that spread when you retire, and therefore you're going to have a big nest egg.
Here's my issue with that, right? Tax benefit, I think about taxes today. Obviously with tax law changes, individuals, couples getting $25,000, not getting a lot of mortgage deduction today. I'm going to call that one a draw. What do you think?
I think that's probably fair to a degree. I think you can go on both ways.
All right, let's go to stocks. Stocks versus real estate liquidity.
Well, there is liquidity in real estate. If you want to take a HELOC out, invest money in your home, take the money out, maybe purchase another home, maybe do improvements. So there is liquidity as long as you have enough equity in the property.
I think he's reaching. Calls today. We can sell, trade +2, have money to you in 3 days. All right, next up, effective hedge against inflation.
Go ahead, you start first.
All right, simple. Watching my videos, you know I've been talking about we're in cycle 2. Dollar crashing, inflation up. What does that mean? Obviously, things are inflating, okay? We're seeing it everywhere. The Fed will tell you 1.5%. They're out of their mind. Look at this graphic I just put out on social media. Lumber, copper, wheat, I could go on and on. We are inflating like crazy. So yes, inflation's going up, but if you invest properly, you could take advantage of those by owning the right asset classes.
First of all, one thing they're going to try to tell you is that there's going to be a bubble in the real estate market, and that's false. There's not going to be a bubble. Properties are going up because people are getting out of the offices, they're working out of their homes, and the prices are going to stabilize. This is not like 2008. There's not going to be a crash. That was done on credit default swaps by the stock market and by waitresses getting 4 homes for $40,000. Okay,
so you're starting with there like us as a whole. Okay, I got you from there. Okay, all right, so next, stocks, real estate. Stocks has less work.
I would say to a degree it may have a little bit less work, but I think if you get the right real estate agent to do the work for you, just like when you get a good advisor, they do the work for you as well.
Yeah, I mean, for me, I think that what I do is not that easy. You know, I've got a very defined process that is 4 or 5 hours every day to be able to make those decisions. Yes, I make it easier for investors. So I would say a little bit of a draw on that one as well. All right, higher rate of return. Oh, well, we're going to go on this one.
Well, here you go. So basically, a good rate of return on stock would be 8% a year. I would say that's a little bit high, but that would be a good rate of return. Real estate generally is 3% a year, except in a market like we're at now, the rate of returns are astronomical, and this is the time to buy.
Here's my issue, okay? I think that when you look at the rate of return, when I do a financial plan, I say 4 to 5%. Why? You go to 2019, that's the number. That's a realistic number in a plan. Each year we look at it, re-up it, depending on where we are at that time. Now that being said, when I look at things overall, The problem is this house, right? We're recording here in my house today. At one point, I bought for X. It doubled. It came back down to X. Okay, I had zero return for 18 years until the last 3 years. So that's kind of the issue for me where, yes, it can grow over time. I agree with that 3%, but it's up and down. And, the stock market is, but over time, I think the stock market is better for an investment standpoint. That's just my thought.
I would say I would disagree with that wholeheartedly, and here's the reason why. The market's going up and it goes down, ebbs and flows, ebbs and flows. Over time, stocks are great. Obviously, I own a lot of stocks as well. But everybody's number one asset is their home, and there's a reason for that. People want to own a home. They want the equity of their home for when they retire. And right now, we're seeing rates unparalleled in the last 30 years in the real estate market, and therefore, people are going to be making more money on their nest egg on the whole.
All right, I'm going to keep this one short because I know the answer. There's no way he wins on this one. Lower transaction cost.
I will plead the fifth on that. Look, there's a cost of doing business, but when you're making that kind of money in that short period of time, you don't mind paying a transaction cost because honestly, you're getting the benefit. So nobody really cares in the end. They care about the bottom line number.
Right now, obviously, on the platform, you see the goofy commercials, no transaction fees on individual equities right now in ETFs. So I think we're on that one. Tangible versus non-tangible. Oh boy. Hold on, let me throw you that softball.
Well, obviously, your house is a tangible asset. When you're dealing with stocks, as you know, you're dealing with equities and stocks, and they are not as tangible as having your own house where you walk into. They're trading stocks all the time, even the ones you like. So I don't think it's tangible as much as a house is.
I think that as an individual investor, yeah, you don't look at it as a tangible. I mean, when I first started on this side of the table, I actually got stock certificates, sort of tangible, right? You could kind of feel it. Now, I will say at one point I went to the Ford factory, right? And it really was awesome to see the F-150 built from the beginning driving out, right? In that process, that's what you're buying. You may not have it, touch it, but it is a tangible product as a whole, just not when you're buying it individually. So I'll give you that one. Easy to diversify. Winner, winner, chicken dinner.
Well, there's a point. A lot of people will buy a home as an investment. Take some money out of that. If you know how to buy a lot of homes, you can do it with no money down. Not necessarily in this market, but I was able to buy 6 to 8 properties knowing what I'm doing, and therefore there is some liquidity in doing that and building a wealth management strategy with housing.
Well, obviously, I think he's wrong with that, okay? So with diversification, again, seeing my videos, my latest market update up here, you look at the cycles and we diversify. You can be in gold, you can be in wheat like we've been in, oil, marijuana, which has been really big recently, right? So there's so many different sectors because that's how we do it as a tactical manager. We're not just putting it in a pie and letting it go. I think we have way more diversification opportunities, and that gives you the opportunity. Now, I think for you, when it comes to real estate, sure, if you have some commercial, some residential, maybe that gives you better diversifications or different markets because each market's going to yield a different return, right? So there's but I still think we win this one.
I would say you win by an edge, but there's more to the diversification than you're claiming. There's people who buy rental properties. There's people who buy lots. There's people who buy houses, take equity out to buy more rental properties. There isn't diversification. It's commercial. So on the whole, you have more products. But we do have products to diversify in if that's something you want to do.
So draw. I think I win that.
I think you win that. I hate to admit it, but I think you've got this one.
Yeah, okay. Ability to leverage money. Here, let me just hand that to you in a silver platter.
No, you go first, and let me see what you think you can give us for your situation.
I think that, let's look at it from a real estate standpoint.
Sure.
Obviously, now my home is worth X. There's a lot of value in there that could be, taking money out. I don't recommend taking it out and put it in the market. I think that's a little crazy sometimes. Some people, my situation, might take out to help pay for college. I've got 3 in school next year. I'll let you know how that works out. But, yeah, that's about all I got on that one. Because I don't think, you could do margin accounts in the investment world, and I think that can be dangerous if you don't know what you're doing, right? If you saw last week, there was a big hedge fund that went under because they had a margin call. So I'm not a big person doing leverage when it comes to investments.
And I'm not a big person to leverage when it comes to your personal home as far as doing HELOCs and taking money out. But there are people that do it so they can purchase other homes. And it's a very good strategy if you know what you're doing. Obviously, for the novice, I don't recommend it, but there are a lot of people that do it. And they take those homes and they move more homes and more homes until they get a real estate portfolio. And I think that's a really good way to go if you know what you're doing.
All right, so next up, and our last topic, unless you think I'm missing something, easier hedging. Okay, I got this one because he's stumped, obviously. All right, so let's talk, what does it mean to hedge, right? So there's a couple different ways to hedge. One, when you look at asset classes, I look at correlation. So do they move together, right? Let's face it, large cap growth, small cap, they all move together. But if they all move together up, they all move together down. So you want to get asset classes that aren't correlated to that, right? So sometimes gold is that, treasuries, there's other things out there. So that's one opportunity. The other thing is you can hedge in our world with shorts. You can short the market, right? You can own the market long or you can short it. You can bet that it goes down. That's another strategy. You also have option strategies. So there's a lot of different ways for us to hedge in our industry. Some have more risk, of course. Some, you really got to know what you're doing, especially when it comes to options, but we definitely have an easier way to hedge our portfolios.
I would say you have an easier way to hedge it, but there are ways to protect yourself in real estate as far as when buying and selling. There's three markets. There's a buyer's market, a seller's market, and a fair market. If you are holding property and you see the rates creeping up as they are now, most important is inventory. When inventory starts to shrink, that's maybe you want to liquidate some of your portfolio and take your profits like you would do in stocks.
All right, final thoughts. Who wins?
Well, I think it's an unfair battle. I think that the reality of it is that over the course of time, notwithstanding this market, that probably stocks may be a more grounded approach. But for people who want to accumulate fast or large or wealth, I think real estate's a better asset to try to do that with. I don't know how many people get rich selling stocks, but I know a lot of people get really rich selling real estate with not that much knowledge.
Well, I think that's totally false, obviously, because look at all these hedge fund folks. But, you know, I think it's like anything else. If you want to diversify, right, you have your home, sure, right? You might have another property. I've got clients with 3 different properties, and then you've got your investments. I mean, I think fair and equal, but I think the big thing, like you said, you know, over the long term, it's been 3%. Right now, in secondary markets like us, it's through the roof. Okay, so you're seeing, I mean, I don't know, what's in the Delaware Beach market, what's the appreciation year over year?
Generally?
Right now?
Right now, almost 50%.
So, you know, I can't compare it to stocks because compliance won't allow me, but that's obviously a hefty return, okay? But I disagree with what he said earlier. I think this is setting up for a bubble and a correction, not a big correction, because I agree, again, people are moving to this community because they can work from here and be at the beach. So I think that overall, look, it's just, you got to have both, hopefully.
Sure, absolutely.
As part of your plan, right?
Agreed.
It's kind of like have the home, and if you could do others, great, and just have a little bit of a diversification. All right, so if you want some additional information, you know me, you've been through my YouTube channel, Dan Tagliente down here, realtor in the area, living the dream at the beach, right? This is a great community to live in, no doubt about it. It's the quiet resorts, as they call it, here in Bethany.
And low taxes.
And low taxes, that's right. Fastest growing county in the country for retirees, folks. Like to hear your thoughts. Facebook, Twitter, LinkedIn, we can take comments. YouTube, just hit that like button. Michael Loftus, Wealth and Wisdom TV. Thanks for watching.